This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:37 p.m. Eastern Standard Time on Thursday evening. It is December 12th, 2019. This is a special strategic update webinar on a very auspicious day. As we all know, if you're a trader or investor or an American, you probably know what's going on with the U.S. financial markets and the China-U.S. deal that President Trump has very successfully navigated. We are still awaiting, if I believe, and Dominic, maybe you can correct me, you haven't seen a official announcement yet from President Trump or the White House that he has signed it, right? If I'm correct, I
I
looked.
haven't seen it official, no.
Right. It seems like it is official because not only was President Trump's tweet this morning that sparked off a monster rally, you can see that behind you. This is the story of the markets right behind you that we have predicted and been right. Literally 100% over the past, and I'm not talking rate of return. I'm talking about probability. We were 100% right on what was going to happen, and it's happening very quickly. We'll get into that very shortly. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. Two very important reminders. Number one, for active, non-active swing traders, you have to follow the real-time Twitter feed. If you really need to make money or manage your positions as the markets spike higher, and the markets are still going to go higher, in my opinion, okay? I've been saying that for weeks now. I've been saying that for months, despite intense volatility, 400, 600, 800 point type of drops intraday, 100 points, 200 points, 300 points. Look where we are today. Okay, so there will be bouts of major volatility, which will cause frustration, fear, mess around with your heads, because that's what volatility is meant to do. I've explained that thoroughly in multiple webinars, that these black box algorithmic high frequency trading programs are not in the business of being your lover. Okay, they are in the business of messing around with your heads and get into your brain and make you do the stupidest things ever, which hopefully at Clueless A Trading, we help you make less stupid decisions. That's really what we do here. And how do we do it? We do it in the form of these unbelievably precise tactical roadmaps, trading charts, so that you remain somewhat sane and not be like one of those crazies in Florida. You know, the guys that's those crazies, you know, taking drugs, bath salt or whatever they called it, and they started eating other people's ears off. Well, I don't want to sound gross, but that's pretty much what algorithmic high frequency tradings are meant to do. They're meant for you to chop your own limbs off and bite on them. In other words, make the stupidest trades. So please don't do it, or if you do it less, and you're going to see the fruits of your labor in the form of higher profit, a green and a very profitable P&L. All right, I mean that. Just listen to it and just do it. Just stop making the same mistakes over and over and over again. We all make mistakes. I make mistakes. You all make mistakes. Some of you make mistakes all the time, which is just terrible. Okay, but that means you have a lot of room to move higher. In other words, you can improve yourself. But let's make less mistakes. Let not the volatility get to your head, into your account, and these charts will help you manage that, your state of mind better, so that you know where the entries and exits are. And remember one thing, these are not grandpa's markets. All right, guys, you see the volatility in the market. Each of these drops are, you know, are 20, 30, 50, 100 points. This was a 200-point rally. This is where we are right now, with futures up approximately 14 handles, over 31.84. Told you guys we were going to go there. Now, if you look at this chart, even a child can read it. These are straight lines. They're not zigzag lines. The zigzag lines are the whole volatility price moves, right? So, but these lines are structured. So where is this line telling you the markets are going? This line is telling you that the markets want to go somewhere around 31.90, 31.93. And you know what? You're going to wake up tomorrow morning, and most probably this is exactly where we're going to be at. And what's going to happen here? Well, again, this is not rocket science. If you sell your profits, you look to see what the retracements are. Okay, we had a sharp move higher. We retraced lower, where the market dropped from being up 300 to only being up 50 points this morning. Well, did I panic? No, I showed you guys where it was going to bounce for. It was going to come back and retest this thick red line, which was the breakout level, and that's exactly what it did. It actually slipped below that, retested the previous breakout that occurred, this line here, and then it ramped up. This retest of this big time, all-time new high breakout right there, this line at 31.58 was inevitably gonna get retested, one way or the other. Okay, and that's what the markets did within a matter of a couple of hours, and then took off. These lines, these parallel channels are serious. If all hell breaks loose and the China deal is just unbelievably great, the market is going to go past 3,200. I'm telling you right now. All right. So you can sit there and tell yourself, oh well, yeah, yeah, maybe, maybe next time. Yeah, I'll get in tomorrow. That kind of garbage doesn't work anymore. Nobody's saying take all your money and just shove it in there, but you've got to have long positions in these type of markets. I keep on repeating to all of you, and I say this with respect. I am not your broker. I'm not your advisor. I am not your wife. I'm not your husband. I'm not your dog. I'm not your pet cat. I'm Clueless A Trading. I'm here to guide you through the most difficult times in the markets ever. And I've done that in exceptional manner through thick and thin. So respect that work. In fact, your first goal is to respect yourself. And try to understand these charts, try to manage the volatility, and make crap loads of money. Look, none of us are reaching that peak performance level where we are getting from A to Z and taking most of the profits with us. None of us are doing that. But let's at least try to get to peak performance level so we can, where our win ratio is much higher, is in the 80% level versus our loss ratio. At least I try to do that every single day. So don't make excuses anymore. It's almost pathetic. All right. Great stocks. We're going to talk about stocks a little bit. I want to cut this thing. I want to keep this recording a little bit short and a little bit under the weather. So I want to make sure that I don't get a flu or something, in which case you guys will be so lost. You'll be losing money right, left, and center, right? With nobody to guide you. I'm just kidding. But seriously. So we're going to talk a couple of stocks. We have had multiple buyouts. We have stocks that are about to get bought out. But if you don't have a position, you're going to ho-hum and, oh, yeah, maybe, the same slew of BS excuses is going to come your way. And then the buyout's going to happen. Or an FDA approval. Or for that matter, a US-China trade deal. All right? Seriously. Get with it. Hashtag time to grow up. So these channels are serious. If things go really haywire on the upside, I'm looking at 31. This upper end of this channel, lower end of this broad channel. Let me change the color here. That started off with a small bull flag that I identified way back many years ago, called the 3rd of December, which was 2 weeks ago. If you remember, markets crashed hard on a 2-stage crash, right? And there was this little bull flag here. I had pointed out that bull flag. That's why it's shaded like that. Markets went up, came down. Now we could draw a channel, and boom. So this channel, if things hadn't, if things, and please, everyone listen to this carefully. This is very simple. I repeat, this is not rocket science. So please, let's use the KISS principle. Keep it simple, stupid. All right? So let's do that. This is an uptrending channel that kicked off on the beginning of the month in December. This uptrend channel is what the markets were traveling in. But instead of staying within the uptrend channel, the markets dropped off that on the at around 1:30 in the afternoon on the 9th. And all this is within a matter of days. On the 9th, that was what was the 9th? The 9th was Monday. So market fell out of that channel. Right? Yeah, right. So let me just do it in red. So it fell out of that channel. instead of staying in there. Since then, it has been below the channel, even though the market has climbed higher. 1 second. Why is this box here? Sorry about that, guys. There. So here's your uptrend channel. Let's keep it simple, stupid, all right? So please focus. So here's your uptrend channel. But instead of doing that, it fell below that. And it zigzagged its way till it broke out like a monster. But here's the beauty about why there is more upside to the stock markets. All right? The uptrend channel, mathematically, I mean, it's already been drawn. The uptrend channel does not end till the markets end up at 32.20. Are you with us, Dominic?
I'm with you.
Okay. So now that we are trading below the uptrend channel, isn't there a possibility that it punches through over 31.90 and towards 3200? And what if it punches through? Then we are back in this uptrend channel that we should have been. Instead, we fell out of it because of the intense volatility generated by the tensions and the rumors and the rumor mongering, I should say, and the fake news and the flip-flopping coming out of the Trump administration many times, like, yes, it's good, yes, it's bad. One day you like what do you call chicken dumplings, the other day you don't like it, right? That's what was going on. It's very frustrating. I know that, but we don't control the tweets coming out of the White House or comments coming out of the Chinese officials or this and that. So all kinds of stuff. So now that's been somewhat resolved. President Trump himself said they're very close to a deal, and we are the phase one deal, which I said was going to happen. Now, I'm no genius here, but I think I read the world political and economic and cultural game aspects better than most people out there. It's very, very important. Not just very important, it's very critical for both nations, more so for China and also for us. So bottom line is, what if we enter back into that channel? We're going to 3,200. People say, oh, yeah, look at that guy. Yeah, look at that guy who's been right almost 90% over the past couple of weeks and at least 60 to 70%, if not more, over the past couple of years in predicting where the markets are going to go. Yeah, like they say. If you're right, you have the claim to stand on the podium, raise your arms and say, I'm right. But that doesn't mean that you're going to make crap loads of money because the volatility makes you mess up your trades. Not everything goes up on a big day in the market. Was everything up? No. There's so many stocks that were slightly down today. That, instead of looking at it on a negative basis, I look at it from a trading perspective, an investing perspective, as a positive. Like, okay, it was down. Does it have room to move? Boeing, for example, was down slightly. And now after hours, almost going positive. So look at those type of companies as an opportunity instead of, oh, they were down on an up day in the market. So this market is not grandpa's market. There are hedge funds playing in it. There are algorithmic high frequency trading programs playing in it. There are all kinds of asset correlated, what they call CTA, commodity trading accounts. There are futures traders. There are this, that. There's a whole hodgepodge. This is not grandpa's market with a couple of Wall Street banks are completely controlling the stock market. Or mom and pop are really buying stock. Mom and pop is completely running out of the market. I put those out every week. I see the same thing. 165 billion came out of the stock markets just in the past couple of months. 165 billion. Like, where are they hiding? Maybe they're all going there and buying Lululemon tidy pants. I don't know. No, mom and pop is not interested in the stock market, which is great because we're interested and we're making money. Now, you want to be another grandpa, mom and pop type of investor, which doesn't want to do anything because the market's down one day. Well, I don't have anything to say. So going back to it, this uptrend channel can jettison the market to 3,200 by, is it possible this month? Sure, it's possible. Is it a high probability trade? I don't think so, but who knows? And the reason I say who knows is because once we punched over this, we are then back in this uptrend channel. It's really as clean as day. And that's it. Markets never go up like this. Markets go up like this, as you can clearly see. And in between, sometimes it takes a ugly detour. The way you look at it is on a short-term basis, that back at the beginning of December, we were here at around 31.58 on the S&P 500 futures. Let's say S&P 500, 31.58, okay? Today was the first day, on the 12th calendar day, that we broke out of it. So basically, all this time, for 12 days, we just came back to where we were on the 3rd. Keep it simple, stupid. The KISS principle, K-I-S-S. All right? K-I-S-S. So we just came back 12 days later and we finally broke out. So the point to measure from, in my opinion, is the 31.58 level. So where can we go from 31.58? Now this has become major support, or 31.51 or somewhere, you can see the lines here. Now, another thing that happens, which is very important for all of you to keep in mind, is that the markets tend to consolidate sideways. This is why I've taken the time and energy to draw this shaded green box. It wasn't there for color effects, okay? This ain't a Disney cartoon. So bottom line is that this consolidation channel was good for 31.52 to 31.21, roughly 30 points. 30 points. The depth of this range was 30 points. Now, every single time I've shown these type of range breakouts, you know what to do, because it's pretty much right. 99%, I would say 99, 90% of the time. So here you have a depth of 30 points. So if you add 31.50, 51, it is 31.51, top of the range, right? 31.50. Okay, 31.50, and add 31.50 to it. Guess what? That's exactly what we are right now. We have moved up 30 points in a matter of 24 hours. 30 handles. 30 times 8, 240 points. Pretty much where the market closed at. So at this point, now this is the next trading. This is the next trading channel. 31.70, let's call it 31.80 to 31.50. What's the depth of this range? Come on, somebody pipe up. Hey, Seti. All right. So depth of this range was 30 points. So all we do at Kulos Trading is we show you unravel the algorithmic high frequency trading mysteries. Seriously. So this was 30 points. Somebody please answer. What's the depth of this between 31.80 and 31.50? Is anyone there to answer my question?
Another 30 points.
Exactly. So why is it taking so long? Not you, but Seti, can you hear us? If you hear us, respond, because we like interaction. That's how you get it through your head. 30 points, exactly. 30 points. So add 30 to 31.80. Where do we come to? Because now this is trading range number 1, which lasted for a bunch of days. Back and forth. This is trading range number 2. So the market can move back and forth like this for a whole bunch of days, maybe 3 or 4 days. Still, this is bull channel. It's a bull flag consolidation channel. Number 1. This is number 2. So once it breaks out of this, it has broken out of this kind of today, but it'll go back and forth. Once it break out of this, what's 31.80 plus 30? 32.10.
Yep.
Mr. Microsoft is here. You should be able to answer that real fast.
Yeah.
Okay. Yeah. So 32.10. So speak up. Remember. So that's another 30 points. So is it not possible that the markets between now and Christmas gets to 32.10? Of course it's possible. In fact, it can happen tomorrow, for all I know, once we get the official announcement. Do you think this is a joke that the phase 1 deal's starting? Here is another thing. So, all right, so we established that once we get back into this uptrend channel, 32.10 is very doable. And you know what all the so-called smart people out there on all the trading forums, on StockTwits and other trading forums and CNBC, they're going to say, oh, wow, look at that. And we're going to say, we looked at that and we predicted that weeks ago. You know, a lot of very smart people don't make good traders. You need smartness and you need cojones. And you know what I'm talking about. You need grit. You need risk taking. And you mix it in with all these technical aspects of it. You mix it in with the element of luck. You know, there's an old saying, luck favors the prepared mind. So if you're not prepared, why should luck favor you? Think about that for a minute. So bottom line is, that's it. I don't want to harp on that too much. The other aspect of the market, which is a very powerful indicator, is the sentiment factor. Okay? Repeated sentiment readings from Bank of America, from American Individual Association of Individual Investors, which is basically mom and pop, are constantly showing high levels of bearishness and very low levels of bullishness. Yet the markets are making a new high. This is the most hated bull market since March 9th of 2009. The market bottomed on March 9th of 2009. I was on Wall Street. I know that. Okay? And it's the most hated bull market. The S&P hit like 666, 667. Armageddon was at the doorstep. Well, like my favorite saying goes, Armageddon postponed for another day. Okay? This is a very serious bull market that has been going on for the last 10 years. Will it come? And again, to remind you all, I'll show the long-term chart. Some of my readings are showing for some very bullish analysts, very few of them, that this could be the start of a major move in the market, which could take us well past 30,000 down. Well past 30,000 down. 30,000 down is just around the corner, ladies and gentlemen. We're at 28,132. So bottom line is that because all this China tension has kept severe amount or lots of great international companies, American companies specifically, that's what we're concerned with. But international global economies matter because they buy from us. So if they're not going to buy from us, we ain't going to move forward. So now that this massive overhang, this dark cloud of this ominous trade war is being slowly but surely lifted, significant amounts of capital spending, billions of dollars that companies want to deploy for capital expenditures, for building plants, hiring more, and doing this, advancing, buying more, better technology, blah blah blah, can be unleashed. And if it's unleashed, what's going to happen? The stock market's going to go into a bear market? Think. Our brains are programmed to survive. So you know what when your great ancestors, the cavemen, the Neanderthal, whatever, I can never say that word. When they woke up in the morning, what was their first thought? SETI. This is a Microsoft question, okay? Imagine you want to, this is your interview question. Of course, you work there, so you're a smart guy. What was the first thought that went through the ancient cavemen and women when they woke up first thing in the morning? Because that's how our genes are wired in our brains. That's how we are mentally wired. What was the first thing that went through their head, SETI? Just think. Give me an answer. Right or wrong, just give me an answer.
I'm not sure.
Survival.
Who said that? Dominic?
Survive.
Survive. What do you mean you're not sure? Of course you're sure. The first thing that went through their head is, am I going to survive today? Are the mammoths and the wild animals? You think I'm kidding around? I learned all this from watching the Disney shows. Okay, I'm just kidding. Seriously. Yeah, survival. Like, am I going to live today? As a trader, don't you feel like that in the morning when you see futures down 400? This is all part of mental calibration. Let's keep it simple, stupid. And I'm not calling you guys stupid. I'm saying we're using the KISS principle tonight. So the first thing is survival. Am I going to survive that 400-point drop? Are my options going to survive? Are McDonald's options, which we bought originally at 60 cents, and they go down, or 70 cents or 80 cents? I think originally we bought it at $1, and then it goes down to, went up, and then it went down to like 30 cents, and today went to $1.50, up 500%. Net gain 400% or 300% just from yesterday. So the first thing that goes to your mind is, whoa, am I going to survive? So the thing is that our brains are geared towards survival. So the first thing that goes in is am I going to live? So what happens? No one wants to think that you can live, and you can live for a long time. God has given given me His blessing, so I'm still alive. Well, a little past half a century. Wow, that's a long time, and I still feel damn good, guys. Thank God for that. Pray every day. Okay? So bottom line is that that's how traders are. Human beings are. They're always thinking of, oh my God, the world's falling apart. In the meantime, the market's just going way up. So you wanted to make a strong point on that. So this is what this is a long-term chart of the stock markets. And the reason I'm kind of mentioning the bigger picture, so you guys can manage the big picture and stop thinking that the world's going to fall apart every 2 minutes. And I'm not talking about 200-300 point volatility every other day. I'm talking the bigger picture so that you can manage the smaller picture. If you live in a trading universe in your head, thinking that you're going to be finished tomorrow, like they say, scared money never wins. You'll never make real money. But that doesn't also mean that you have to be super confident all the time. It simply means that you need to be cautiously optimistic and never get too excited over anything. And certainly don't get too terrified. So when you look at this long-term chart, does this look like a bear market? Just asking a simple question, SETI. And please answer.
I don't think so, if the trade deal works.
SETI, are you for real? Forget the trade deal for a minute. Does this look like a bear market when you look at this chart?
No.
If you see, you're too complicated, you guys, sometimes. I asked a simple question. When you look at this chart, even a 3-year-old will say, oh no, daddy, it's going higher. That's all I'm asking. What's the first visual thing? And where is the trade deal not working? The trade deals got signed today. See, this is a prime example. And I'm not picking you as an example, Seti, but this is something of a learning experience. This is a prime example of what's happening in the overall general stock market. Everyone's so shit scared all the time that that's exactly what they don't even see, the blindingly clear picture that is being shown in front of them because they're so scared about a news headline here and there. Am I right or wrong, Dominic?
Absolutely.
I'm totally right. And this is not a question of whether I'm right or you're wrong. It's just the facts of what's going on. Even today, you got so many analysts coming out and said, just the way Seti sounded. You just sounded like a Wall Street analyst, who's been dead wrong on the market for years. That's why you joined Clueless Aid Trading, so we can mentally calibrate you to be a real tactical warrior. So they're saying, oh, well, if the trade deal works. What the hell are you talking about? Look at this. Even if the trade deal doesn't work, okay, we drop here. So what? We drop to 3,000. That's a 600-point drop, let's say over the next week or so. You buy here, market goes higher. Now, the trade deal is very critical. I agree with you on that. But what my question was that when you look at this broadening wide since 2009, this was the only time we almost went and touched the bottom on this level, and that was back in 2018. The Christmas Eve massacre, which many of you, all of you should remember, because Christmas Eve, December 24th, markets closed down 640 points or something like that. And since almost came to the bottom of this channel. That's what I thought it was going to come to, but it didn't. It went and it is now on this ascending triangle that we broke out of last week. So what if we break out over this? Now this is a monthly chart, so this is not something that happens in one day. Each of these candles are monthly. What is the upper end of this channel? SETI.
Yeah, I didn't
Focus.
get you.
Focus a little bit, okay? What is the upper end of this channel?
3600.
That's right. So there being a monthly chart, is it not possible that in the next couple of months we can climb up to 3600? So if we climb to 3600 from 3170 that we closed at, 3170 minus 3600 is 430 points. Do you remember what one S&P point is versus if you convert it to Dow Jones point? I asked you to write it down. How much is one S&P points when in Dow Jones? And Dominic, don't
8.
answer. Dominic, I told you not to answer.
I didn't hear you.
I want this kid to learn. He's smart. SETI, write this down somewhere. Did you
Sure.
write? Yeah, I have asked you at least 9 times. Somebody's going to listen to this. Oh man, he's really picking on the guy. I'm not. I like SETI. I think he's smart. He's tech smart. He's not trade smart. One S&P point is roughly 8 Dow Jones Industrial point. So 430 points roughly is how many Dow Jones points? SETI.
It should be
I don't want an exact answer. What's 430 times 8? Okay,
4
listen.
around
I honestly, I'm not going to tell your boss that you didn't know how to multiply 400 times 8. Okay, roughly.
3440.
What?
Yeah, 3440.
Okay, good. So you got exact. I just wanted a round number. The round number was 3,200. Anyway, so 3,440 points. So add 28,000. This is the Dow Jones Industrial. So that's the upper end of the channel. Another 430 points. So 28,132, and we add 430 points. Is it possible that by the first quarter of 2020, which is ending on March 30th, 31st, 2020, that the market basically goes to roughly 32,000? It's absolutely possible. Absolutely possible. 28,140 plus 3,440. I did something wrong here, but none of you corrected me because most of you guys are probably sleeping. So 3,440 comes to 31,580. Let's call it 32,000. So is it possible that the Dow Jones goes to 31,600 or 32,000? Yes, it's absolutely possible. So this is what I'm saying. I don't want to harp on this. I think I made my point. This took many months to develop. This took more than a year to develop, this ascending triangle. And these are big moves. Okay, and now we are out of it. Now, is it not possible that we come back and retest the breakout? I'm sure we will. So be prepared for that. Be prepared for that. And I think that's going to happen in January, where we drop 600-700 points real fast. Or who knows, maybe it happens faster, but I think it's going to happen in January for tax-related purposes. And then the markets bounced again. But we shall see. So that's your bigger picture. In the meantime, these are the charts that you need to survive. Otherwise, you're finished. Okay, huge move down, up, came down, retested the breakout, and took exactly off that. I'm not surprised anymore when I see how precise the structures I draw on the chart and the markets obey it. They hit those levels, pull back exactly to those levels. It used to surprise me. It doesn't surprise me anymore. Why? Because the markets are mathematical, and I'm drawing my structures in a very simple mathematical linear fashion, different patterns and everything. No wonder the markets are obeying clueless say trading charts. Now these things happen very fast. I don't control that. So that's it. That's about the markets. Futures are up about 14 points, and that's it. So I don't want to. Oh, let's look at two other things here. Very important, which is more of a predictive indicator. This is known as the S&P 533. Generally speaking, I told you when the stochastics turn, you buy. Doesn't matter what happens intraday, you buy. You generally stay long. Well, that's exactly what it's doing. The second, and it's breaking out. This is not a trading chart. This is a directional bias chart. If somebody asks me, hey, show me a couple of charts, would show me, well, I'll show you the longer term picture where the bias is still upside. This is the more advanced, what we call the SPX 533 chart. And this is telling me these histograms are going to go green. These histograms almost every single time goes green. The histogram bars once the stochastic turns. So simple. This is simple. And please, I'm going to ask a simple question. If these histograms are going to follow the same pattern and they're going to go green over zero, this was actually red because they were below zero. And you can see that after today's push, did I update it? After today's push, it's about to go green. What does that mean for the overall markets? What does this mean for the overall markets?
Higher.
Actually, Dominic, don't answer any questions anymore, okay?
It's
I
going
want
high.
Seti to answer, okay? And when histograms go green, and I've worked with you guys many times. I've shown in multiple training videos, free complimentary videos. And Seti, guys like you who are still don't quite get it, you need to sign up for those advanced coaching sessions so you get it and make some real money, not just try to catch a trade here and there and then give it back to the market for no fault of your own because you don't know how to manage it. All right, so sign up for the ACS as soon as possible. The few extra bucks you're going to spend, you're going to translate into big bucks in your pocket. So when these histograms go green and each bar is 1 day, then we can see that we have a fair shot, as I said, to have a multiple rally, which can take us into that 3,200 plus area. So this is a plus. Now, short-term intraday, you might have one or two red days. That's fine. That's standard volatility. Live with it. Let's look at the weekly chart. The weekly chart is seriously scary if you're a bear. You do understand what a bear is, Seti, right? I don't mean the animal. I mean the animal. But what is a bear in the stock market?
Stock going down.
Right. A bear is somebody who's bearish on the stock market. Thinks the market's going to collapse. A bull market or a bull in the market is somebody who believes that the stock market's going higher. So you understand that part, right? Like being long, being short. You understand that, right?
Yeah.
Exactly. Good. So bottom line is that this is serious stuff. These histograms are just expanding like nobody's business. In fact, it started expanding on the weekly chart back in October. Since October, we have had lots of ups and downs. But do you see that in this SPX 533 chart? No, because the directional bias is higher. In between all the volatility that we have to deal with daily and intra-week. Look at these histograms. This is very scary if somebody's a bear. Bear markets don't just start like this. It takes a little bit of time. You see many different technical indicators, moving averages, all kinds of different hidden indicators, divergences that start to show that the market's going to go into bear market. You know, when we almost went into a bear market, and I even said that on my video, was back in right here, back in May, and back in December of last year. If we had broken this channel, we would have gone into a pretty serious bear market, but we didn't. So let's not live on what didn't happen. Let's live on what can happen. Okay? No bear market in sight, for God's sakes. And bear markets don't happen when the Federal Reserve is so friendly to the U.S. economy and the U.S. stock markets. That's another day story. If you listen to my previous videos, you know that. All right. So bottom line is, where is that thing? Where is that thing? Okay. So all this is good. We can have another couple of weeks of a significant move higher. Let's say till the first week of January. All right. All this is fine. Now, this rally lasted for how many weeks? What's the date up here, guys? 1 second. This one lasted, this is how many weeks now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we got maybe another 2 weeks or so taking us in the beginning of the year before we get a nice little dump lower, which is still going to be bought. Okay. Now, the other chart, which I will look at for the first time tonight with you guys, is known as the New York Stock Exchange McClellan Oscillator. Right there. The significance of this oscillator is very significant. How about that? You know, double positive. Stating the obvious. Want to understand why this works so well and stuff? Listen to my training videos on the new member intro. I think I explained that a bit. Look it up on Investopedia and sign up for the advanced coaching sessions. I'd be more than happy to spend some of my time to explain to you these dynamic indicators, which can make a lot of money for you guys if you use it correctly, or help you make less stupid decisions. So this McClellan oscillator, when it was down here, anytime it's in the negative 50, 40, 33, 52, 79, forget about it. 60, minus 60, these are all negative, right? You want to buy the market. When it gets up into this range here, which is slightly above 30 or 40 or 60, something like that, those are extreme. That the market is extremely overbought. That means we're coming in for a sharp fall. So all of this is telling me that we are starting to get overbought, but we're not there yet, which fits in with everything that I showed you, that the market still has room to move higher. So saying all that, like I said many, many times before, you don't worry about, if you don't know how to manage your trades, you don't understand how to dollar cost average, when to buy reversal candles, regardless of what I put it out there, just trade the SPY. The S&P 500 ETF. Trade the IWM, the Russell 2000 ETF. Trade the QQQ, the NASDAQ 100 ETF, which is primarily tech and biotechs, primarily big tech. Okay, or even trade the DIA. You can buy options on these. This is the diamonds, Dow Jones Industrial Average. So everything that I showed today clearly show that the directional bias is still higher. So if that's the case, this has delivered hundreds of percent to us, if not 50, 60, 70, 80%. This one from yesterday alone, it was up 80% as of the close. Before the close, when the market shot up 300 points, it was up almost 85%. I'm sorry, 90%. SPY calls, IWM calls, still going higher. QQQ calls. And DIA, we haven't traded for a bit, but you can always trade it on your own. So there's no excuses in the stock market. None. Whether you're trading with small money, whether you're trading with big money, there are no excuses. So stop giving yourself excuses. I stopped doing that to myself a long time ago. Okay, stop giving yourselves excuses so that you can feel a little bit better, because some of you have done the most horrendous things by not being involved in the stock market the way you should be, and seeing others make money off these great trade alerts, tactical charts, all kinds of stuff. And you're like, well, tomorrow's a new day. Start fresh. All right. So if you want to play the cleanest way to play the markets, just play these. This is not rocket science, because today's session is about being KISS. Keep it simple, stupid. The more we keep it simple and understand the complexities of the charts and all those lines and everything, the better off we're going to be. You want to make this market really complicated? That's your business, not mine. So this one was 11th of December, which was yesterday. So I haven't updated it yet. So yesterday, this is what the McClellan oscillator looked like. So now we're going to update it for today. Whoa, look at that, baby. It is now shooting up. It's at 23. So once it gets towards about 35 or so, and this one is not a real-time chart. This one I have to update around 6 p.m. every day. Then that's when the market gets really overbought. So we are starting to get overbought, but you can clearly see from the directional bias of these lines of the stochastics that we still have room to go higher. And that's when the market gets overbought, really overbought, and starts to fall. So maybe another, who knows, maybe another 200 points on the Dow. That's when we get short-term fully overbought. Throw in a couple of quick stocks. I can look at it for you guys because I have a lot of stuff on my Twitter feed, so I don't want to keep on talking about the same thing. And I'll be happy to answer that. Then I'm going to wrap it up in about 10 minutes. Seti, throw in a stock that you want me to look at.
MACD.
Sure. MACD is a serious moneymaker. Did you make some money on it? Don't tell me no.
Yeah.
Actually, tell me no. Tell me.
Yes.
You
I
made money on it? Yes or no?
yes, yes.
Okay, you're gonna make a lot more money on it, in my opinion. It is one of those type of stocks. I'm glad that you mentioned that because Dominic and me were having a conversation about that. I'm never gonna call a safety stock because that's a dangerous word to use, but it's not a crazy stock. It's a frustrating stock sometimes, but it is not a crazy stock like Roku and all these other hardcore stocks. This is and something which is coming off the bottom. So, and it's a blue chip Dow Jones Industrial stock, for God's sakes. So this is our chicken play, right? Show me the chicken, not show me the beef. Show me the chicken. Show me the fake beef, the Beyond Meats. So McDonald's, basically, on a technical basis, this is a bigger picture. This is your daily chart. In my opinion, it's got significant potential to move higher into the gap. I believe it was Piper Jaffray. Look it up yourself. I put it out there. Put a price target of $214 yesterday morning. Because of the volatility in the market, the stock was actually slightly lower. Great. Gave us more chance to buy it. 30-cent calls, went to $1.52. Do the math. That's a 400% ROI, return on investment, and a 5-bagger. So technically, what's going on here? All right. We have a couple of things to monitor. First, this is known as a megaphone. Is it on yellow? Yeah, right there. These two lines. These lines were not drawn here for Disney special effects. They were drawn here to show you a wide megaphone pattern. If everything hell breaks loose and McDonald's totally like something terrible happens, nobody goes to Mickey D's anymore. McDonald's, the stock can go as low as 175. That's what the lower end of the megaphone. What's the upper end of the megaphone?
217, 215.
215. Where did that big Wall Street analyst put the price target? 214. Is that rocket science? No. He put a price target at 214. Is that guy cheating and peeking into my charts? So anyway, on the really bullish bent, the stock can ramp up to 215, not over months and months, maybe a couple of weeks. Who knows? But if McDonald's moves, that means the Dow Jones Industrial Average is also moving because it's a big component. I mean, it's a weighted component of the DJIA. So that's the bigger picture. What's the smaller picture that we are concerned with on a daily basis? We want to make money on this every day. We made 400% on it just since yesterday. So this is the patterns we're looking at. The stock, till it breaks out over 198.09, is still somewhat of a bear flag. This is what a bear flag looks like. Once a stock breaks out over the bear flag, it gets a lot of big money flows and also gets a big boost and shoots forward very quickly. So the 198 level, in my opinion, which is $1.20 away for God's sake, can jettison the stock, and this bear flag gets decimated. You will see many technical buyers buy the stock over the 198.32 level. SETI, why? What is this red line? What is this red line? What moving average is that?
50.
That's right. Good. So if it breaks out, once it is not there yet, it is right, it is close. We need to see a real push, like another major upgrade from another big shot analyst on Wall Street or wherever, or a big chicken news. All right, something like that. It's a food, fast food company after all. That they, or something. Some positive news for it to break out over the 50-day moving average, because I'm surprised that McDonald's is trading below the 50-day moving average. Actually,
They had more news today, Frank.
What was the news?
McDonald wins backing of Labor Board.
Oh, okay. Well, that's big, because that's good. That's I didn't see that. Thank you for sharing that with me. So the fact is that that it surprises me trading below the 50-day moving average. Well, that's fine. It's giving us an opportunity to buy this stock when it's still cheap. So once it breaks out over the 50-day moving average, as Seti correctly pointed out, the red line, the stock is going to go straight towards 202, right there, 202.06. This pattern, in my opinion, once it breaks out, remember, all predicated on if it breaks out over the 50-day moving average. This, which is something that I believe is going to happen based on the internals, all looking good. Based on the internals, the external price chart has to break out, price level has to break out over the 198.32 level with volume, with the powerful bullish engulfing bar, taking us towards 202, and hopefully, in my opinion, high probability, it's a swing trade. It's not going to happen in one day. But I've seen McDonald's. I've traded McDonald's before a couple of times, and believe me, it is a monster. As you can see how fast those options move. The options are cheap and they move. What more could you ask for? So bottom line is, this gap gets filled. So there's a lot of money to be made on MCD. What do we have to watch out for the downside? The downside, we should be watching out for 194. We really don't want the stock to break down below 194 or 193, in which case it's going to retest 192 again. Fine, we can buy it there again. But generally, I'd like this to obviously break out over the 50-day moving average. So that's as simple as that. So those are the levels you need to watch. Intraday, it's a very hedge funds trade this stock like crazy. Look how it trades, and the options move accordingly. Look at that. It opened up at 9:30 in the morning yesterday. No, on Monday this week at 196. Wow, looks like it's going to go higher. Next thing you know, look at these sell programs. You're like, why? I go sometimes, why? But we don't control the market. That's what these hedge funds are doing. You understand what I'm saying, guys? Dominic, Seti?
Of course.
So anytime that you see a spike like that, sell it. See what happens over the next 30, 40 minutes, and then rebuy it again. So I can see a pattern, but it's very frustrating. You don't sell it here, like let's say you're up 40% on it, 50% on it. Next thing you know, you're negative. And you're like, what did I do wrong? You didn't do anything wrong. It's these hardcore manipulative algorithmic high frequency trading programs and some funds unleashing sell programs is what they did. And then the stock kind of moved sideways. Then it sold off again after popping up. This is crazy. Tuesday, Wednesday, it's the same thing. It's like a concerted scam. It pumps up to 196, boom, they bring it down to 194. Your calls are upside down. And if you have a bunch of calls, then you don't feel good about it. But you buy because it held 194. I told people to buy it, and then boom, it opens up. McDonald was opening up before the market took off. Don't forget that. So in my opinion, it should have gone like this. Market was up 240. Instead, it sold off. We kept on buying the cheap calls. I sold the 197.5. Nice profit. And then I bought the 200 calls, which cost nothing. 40 cents again. So now another move up towards 198. Those 40-cent calls that I asked people to buy on the 200, you probably sell them for 2 with a 400% profit under your back. If the stock breaks out and goes towards 197, 198, which has a fair shot of going. Are we good with this, Seti? All
Yes.
right. Okay, good. Now, the other stock which we made some decent money on, I sold it, but I did not re-enter it like an idiot, is AMD. AMD is going bonkers. We had a lot of winners today, but AMD is going bonkers, okay? These calls, I told people to buy at 89 cents. They closed the day at 211. That's a lot. You know, $2.11. I sold mostly mine at 190 to $2. So 211 divided by 89 cents when I asked people to buy it is 137% just today. And the stock still wants to go higher. Let's take a bigger picture on AMD. Now, the only problem with AMD is there's no problem, is that this is a very well-loved stock by retail traders. A lot of individual traders, human traders, trade this stock. But regardless of that, the technicals are pointing to a much higher number of somewhere around 45, and on the weekly is showing 47. Holy moly. Okay, so AMD is one. The options are quite cheap, very cheap, and you can buy the heck out of it. Let's do the quick, keep it simple principle, back of the napkin calculation. What's the price here? 35. And this is going all the way back to 2018. What's the price here? Let's call it 19. What is the depth of this range? 16. If you add 35 and 16, AMD arrives at a price of 51. This stock most probably will go to 51, and it's at 43. That's a lot of money. So another swing trade, short-term day trading. This is a great stock to trade. On the breakout, it's all-time high. I believe it's an all-time high. Let me see. Yeah, it's an all-time high. And here's AMD. Let's keep it simple. Let's get the lines out of here. That's it. All right, guys. There's a lot. Look, another thing I want to mention to all of you, there's a lot of stocks in the market that's moving. I know I have 3 screens that I look at the stocks. It's not humanly possible for me to mention all of them. Some of you I know take my ideas, trade with it. Some of you have your own ideas that you trade with. Some of you suggest that. I'll be more than happy to look at the chart and put it up. But there's a lot of stocks moving. And the bottom line is that don't miss this opportunity when the markets are good. The markets are good right now. And some stocks will be down on a certain day. Like Avago was down like, a couple of bucks. I'm like, what? They had great earnings, but that could be a great, that's Broadcom. That could be a great reversal play. It's down about $4 or something from the close after being up $15. So you go figure. You're like, what? We had a huge winner today in Ciena, which is one of a great networking company. Was a big behemoth back in the 2000s. Ciena, CIEN. The calls were bought yesterday. I told you guys to buy it on the Ciena. What here's the stock? I bought the. And again, on earnings, I never buy too much, but I wish I'd bought a lot. This was yesterday at the close. First it slipped, then the stock turned around. First it slipped from $36 down to 33. I'm like, here goes another call option that I bought at $1.50. Okay. And you know where those, so, and then this happened. And this all happened at 8 this morning. Once you had this, it just kept on running. The stock turned around from $33 to 42. Let me show you what the options did, which I actually put it out on my Twitter feed. I wasn't there till the end. I sold the options around here. Take a guess where $1.50 options went. The options were around the $1.50 yesterday when I said buy the earnings play. What do you think the options went? Just take a guess.
$5 or $6.
Huh?
$5.
Almost $6.50. So you're close.
Okay.
Okay. So the options went from $1.50 to $6.47. So let's call it, yeah. So even if somebody bought it here, but I didn't recommend it during the day, so I'm not going to take credit for that. So bottom line is I sold it mostly around 4 to 5, and then it went to 6.47. So let's do the math. 6.47 divided by $1.50. You're talking 431%. Net profit 331%. You can't beat that. Okay. There's a lot of companies out there doing a lot of funky stuff. All right, guys, let's wrap it up. Covered a whole bunch of things. Anybody who has direct questions, DM me on Twitter. Don't do it in the middle of the night. Do it during trading hours. And I'd be more than happy to respond to it. Sign up for the advanced coaching sessions if you really want to enhance your trading skills. The market's good and stuff. And the best part is nobody cares. This is the unhappiest all-time high, new all-time highs in the stock market. Did you see anybody happy on the media or even around you? Nobody. When I'm walking my dogs, like I like saying that, I don't hear people saying, oh, the market hit a new high, Frank. What's going on? Nobody. Nobody is interested in the stock market. Love it. Let's keep it this way till the market hits 32,000, Dow Jones Industrial Average, all right? That's when the bozos are going to start talking. Trust me, I was on Wall Street. I know. Human beings are stubborn. They don't want to realize, they never want to admit they were wrong. Never. So they never want to say, oh my God, I missed this whole thing. Instead, they'll stay quiet. Just the way it goes. Behavioral game theory, behavioral finance. It is not going to be up every day. We're going to get heavy bouts of volatility. One tweet here, one tweet there, one comment out of China, all this stuff. But I'm showing you the overall technical picture. Last thing I'll show you is another one which is about to get bought out. Log me in. Calls were up 300-400%. I told you guys to buy it. It was lying around sleeping at around 30-40 cents. It jumps up to $3 yesterday. All right. So don't sit around saying, I'll do it next time. Just buy it. So bottom line is, this is log me in. Log me in. Citra, that's the online meeting, all that stuff. Remove drawing. Trend line. Okay. So here's what the chart looks like. In my opinion, the buyout, it's a private equity buyout. Elliott Management and some other company. Here's a big gap. You can't really predict buyouts using charts, but this is what my thought process is. We've been buying the stock pretty much from the 69.70 level. It's at 82. This is a cup and handle. It's breaking out of the handle, close below the handle. In my opinion, the buyout news is coming. They'll up the company into a private equity M&A, mergers and acquisitions. In my opinion, that's going to happen between 90 and 95. End of story. Have a great evening, gentlemen. Thank you. God bless you all.